Welcome to HPK Provident Advisors Friday Live. It is Friday, January 23rd, 2026. I'm Brian Peluso, and I have with us David Harper, two of the partners in HPK Provident Advisors. Of course, there's three of us, as many of you know. Mike Kutch taking the day off on Friday Live. So it'll be David and I. And what we do, the partners of HPK Provident Advisors, each week, 12:30 p.m. Eastern Standard Time on Facebook, we take the opportunity to summarize some of the social posts that we put out during the week. Of course, many of you will recognize that Monday is Market Monday. Mike puts out some commentary as to what announcements are coming out during the week, kind of what we're expecting to see, what we're hoping to see, like the GDP number. David will talk a little bit about that. Tuesday's Tax Tuesday. These are just ideas that to kind of manage, hopefully reduce, or have some flexibility in how often, how much, and when you pay your taxes. Wednesday is Wealth Building Wednesday. These are financial planning ideas, just some thoughts for you to consider. These are not recommendations, of course. And then Thursday's Think Ahead Thursday. Those are just more ideas that are a little broader. Not specific to taxes or financial planning, just some thoughts on thinking ahead for your future, your financial future, your life in general. And then Friday, we wrap it up at 12:30 p.m. Eastern Standard Time on Facebook. So thank you for joining us. David, thanks for joining us. We're going to make this one brief. Well, we've got a lot of content. You know, you can see a good bit of our content right here on HPK Provident. .com. And then if you go over here to the resources and the blog, you can see a lot of this information right here. Some advertisement for ourselves next Wednesday, which is January 28th, 2026 at 5 p.m. Eastern Standard Time. We are going to do a webinar on our outlook for 2026. David will be joining me for that as well. So keep that in mind. Go ahead and go on to hpkprovident.com. And again, if you go over to the resources and then events, you can go ahead and RSVP to that, but you don't have to RSVP. You can just join us, and we would love to have you. So now I should be clear that we do not have a crystal ball. We don't actually know for sure what's going to go on in the world. So we're going to talk more about what things that we look at, things that could go on, and how we might be able to adjust things on behalf of our clients as things go, because we don't know the future. David, and you'll be joining us for that, and we look forward to it.
Absolutely. I'm looking forward to touching base, and let's have a fun time on Wednesday.
Well, it's always, in my former life, financial advisors like ourselves were my clients, and many of them had asked me in many years that I had done that. Hey, Brian, why don't you do an Outlook seminar for my clients? Which was one of my least favorite things to do. And the reason being is invariably half the room would look at me and say, Brian, that's garbage. I don't believe that to be true. And the other half would say, wow, that is really interesting. I believe that to be true. And so you never got a consensus of everybody said, well, that is interesting, and I'll take that under consideration, because so many people come into this with preconceived notions and say, no, the world is going to be great. The world is going to be terrible. It's going to be awful. And you really can't win. So as opposed to doing that type of format of, hey, this is what's going on in the world, this is what we think is going to happen, we're going to talk more about this is what's going on in the world. These are the things we keep our eye on. And here are the ways that we can help people navigate whatever highway we're on, whatever exit we need to take, whatever the lane restrictions are on this financial journey, and how we kind of navigate around that. So we're going to be more like your GPS than we are your crystal ball. So anyway, now David,
recalculating.
Yeah, exactly. Yeah. So it could be a year of a lot of recalculating, and that's okay. We'll be prepared for that. David, talk to us a little bit about the GDP number. That came out last night. Good, bad, and different, better or worse?
Remarkable. there's a revision for the third quarter. And the GDPs, they run on a quarterly basis. Now, understand that with the government shutdown, there was quite a lack of data and reports that were coming out. So that's where the revision came in. So people thought that the economy is doing well, but there was really no data to say that. Well, now we got it last night that the GDP for the third quarter was revised at 4.4%. Now, understand the size of our economy, when we have anything above a GDP of 2.8 is considered very decent. 3, okay, good. 3.5, oh, keep chugging. 4%, 4.4%. It's like, it's almost mind-boggling. Okay, and then it becomes that disconnect. Okay, if the economy is doing so good, am I doing as good? And we'll get into that on Wednesday. Now we're thinking, okay, so the GDP is so good, and people are making money, corporations are making money. Am I making money? If I'm not making money, then what do I need to change so that I can hear the coins jingling in my pocket? Okay, and if the coins are get too heavy, well, then let's start turning into bills. And we're not talking about dollar bills. Let's start talking about 20s, 50s, 100s. Okay, but that's what does the GDP really mean to you? Well, it means it differently to different people, and I could say we're in a good way presently, but how does that apply? And I think that's a nice segue into our next discussion, Brian.
Well, so GDP obviously is gross domestic product, and many people will think of it as the economy. It's all the goods and services that are a summation of being bought and sold in the United States. So many people could make the argument when they say, how's the economy doing? They look at the GDP because it is a great summation of everything. And that number would seem to indicate that things are pretty good. But, it doesn't feel that way to most people. We had this Argentina situation, and now we're a lot of this talk about Greenland. But, I was talking to a friend of mine yesterday, David, and it's really not that far of a mental shift to take a look at things, take a breath, and sit back and say, for those folks that say, it's never been so bad, because I actually hear that quite often. And, with all the social media and all the various outlets, if you believe that to be true, it's very easy to find a proof point of that. It's very easy for that to be self-fulfilling, but it's not very far of a mental shift to say it's really never been this good either. New technology, the GDP is good. We've got new technologies like AI so I ask everybody to just sit back and take a breath, and whatever side you're on of that, it's never been this bad or never been that good. And it seems like it's pretty black and white for most folks right now. But sit back, take a breath, and objectively look at the world around you and say, how good is it? How bad is it? I got my own opinions on that, and I just ask everybody to go through that exercise. One of the things we did Tax Tuesday, we were talking about required minimum distributions, one of my favorite topics, really. Of course, required minimum distribution for most of you is the age of 73. That's the magical age where the IRS says, hey, your tax protected account, we're going to use an IRA. It could be 401k, 403b. We're going to use an IRA. It has been tax protected, traditional IRA. You got a deduction on the way in. It's growing tax protected. The IRS says, hey, the deal is off for to a certain amount. For a certain portion of this account, the deal is off. It's been tax protected. Now we want some of our money. For most of you, that will be the age of 73, the required minimum distribution. So the question becomes, and what we contemplated on Tuesday is, well, does it make sense to wait until 73 until you're forced to take money out? Or should you think ahead if you have the time and say, wait a minute, should I start taking money out of my IRA, traditional IRA, which would be taxable? Should I start taking it out now and kind of manage how much my RMD is, my required minimum distribution, when I'm forced to do it at the age of 73? for most of you right now. Some of you, required minimum distribution age is prescribed to be the age of 75, but too many details. So we talked about that on Tuesday and in our Tax Tuesday post. David, your thoughts on, I'll wait until I'm forced to take money out of my IRA. Should I take money now? Should I? It's a big question.
Well, for most people, their retirement accounts are their largest portfolio. And to have that surprise when you're 73 to add to your taxes, you very well may want to consider, I mean, a very good strategy. Going back, Brian, that large retirement account has tax liability. It is all going to be taxable. How do you address that? Well, do I delay it and wait till 73, and then you will realize that the tax man cometh.
Mm-hmm.
So a great strategy is even when you're 68, 69, is take some distribution up to that doesn't put you into the next tax bracket. Talk with your accountant, and you can reduce your hit when it comes to 73. Very good strategy. It does not cost you really any more tax penalties. Because simple fact is we are in a, believe it or not, a tax-friendly environment. Historically, our taxes have never really been as low. You may scratch your head, but Ed Slott tells us, yes, this is a very good tax environment. Well, take advantage of that, because who knows, with any administration, they could ramp up those taxes. We have no control over that. We
don't know the future.
Okay, but that's it.
The fact of the matter is, and this is factual, this is one of the best tax environments that we've been in decades. That's fact. If you go and just look at the tax brackets for, since the 60s, 70s, whatever it is, this is pretty good. Nobody likes to pay taxes, but hey, is what it is. And that goes into kind of a bigger theme. Most of us have grown up and we have been trained that let's reduce as much of our taxes right now. When we do our taxes, by April 15th, we're looking at how can I not pay as much on April 15th? What we like to do is step back and say, okay, let's look at this IRA. Let's look at a lifetime. Now, there's some projections we have to make, what the tax rates might be, what your longevity is, how long you might be here, if your spouse takes over the IRA, your beneficiaries and that type of thing. One way to sit back and say, wait a minute, how can I, with this pot of money, we're going to call this your IRA because we're talking about required minimum distributions, the lifetime of this bucket of money, my IRA, my lifetime, my spouse's beneficiary, how can we figure out how to pay the least amount of taxes with some assumptions? We don't give tax or legal advice, but we have to make projections. But on that pot of money, if we're going to call it a family asset, if you're not going to use your entire IRA throughout your lifetime, most likely, if you're not going to, how can you start to think about now paying the least amount of taxes on that pot of money through its lifetime, not just today? And that might come to a conclusion of let's take some money out of it. I'm not 73. I don't have to take money out of my IRA right now through a required minimum distribution. Maybe it does make sense to take that short-term sacrifice now of paying some of the taxes in a very good tax environment for the long-term gain of the taxation of that pot of money through its lifetime will be lower if I do that now. That's one of the concepts that we should get. That's a big analysis. It involves, getting your tax preparer on board with that and running some analysis with some assumptions and then looking at it on a regular basis. So that's kind of the idea there. All right. We did put out a couple posts that now you can start filing your taxes. I think it was as of yesterday. And then another post, take a look at that. It's, the government is really going towards electronic payments. They really are preferring, of course, the Social Security's got rid of paper checks not long ago. Now the IRS is also looking to move away from paper payments and paper refunds. That is an ongoing trend. That is happening. Figure it out for yourself. If you like to get that check in the mail, say, look, I got a wonderful refund. Or if you like to write that check at 11:59 on April 15th and get it in the mail at that moment. The IRS is really, that the government, everybody's moving towards this electronic payment idea. So take a look at that and just be aware of that. And that's kind of what we have for today. David, any other thoughts, questions, observations? Please join us next Wednesday, though. It is Wednesday, January 28th. It's 5 p.m. And like I said, go ahead on our website.
I do have another, Brian.
Oh, please do tell.
Sorry. Another one is, why should I take money out of my IRA earlier? Because life event occurs. So some persons, you know how your health is now, probably have a pretty good idea, maybe another year or so. But if you wait till you're 74 or 73 or so forth, and you are unable to really travel, say you wanted to go traveling to Europe or Asia or someplace, and you're putting it off because, well, I want to wait till I take my RMD, my required minimum distribution.
Mm-hmm.
If you have something on your bucket list that you want to do, we've learned from many of our clients, do it while you have the strength and means and ability to do that. If you go to Greece and you're in a walker, you're not going to be able to see a whole lot. There's lots of steps that you've got to walk up to visit Greece and a lot of other Mediterranean places. But
for sure.
That's another reason. Okay.
I think it's one of the best reasons. Hey, what's the best way to save on taxes, and what's the best way to avoid inheritance tax and all these other things? In my opinion, this is strictly an opinion. Enjoy the money. Take the money. Take the tax hit if you have to, and enjoy it. What is the total return on the enjoyment of, while I'm healthy and I feel like I walk 10 miles a day? What is the total return of that trip to Greece? I don't know, but it's probably a lot higher than all the other investment products that are available to you. That's my guess. So that very well said. Very well said. That is, I would say, probably the best reason to access your various pots of money, whether they be taxable or not, at whatever age. That's even better than planning for the RMD or when I take my Social Security. Enjoy it. Total return on that enjoyment, that life experience, is hard to calculate, and it's going to be very high, my guess. All right, David. Anything else? Well, I think we lost David. So thank you for joining us. Please stay tuned for a few minutes for very important disclosures. But if you'd like to contact us, you can contact us right there online, hpkprovident.com. And there is a contact us section there where you can either email us. You can even, after some communication with us, you can securely upload documents to that site, or you can call our office anytime you would like. This is also our direct email address, info@hpkprovident.com. So thank you for joining us. For those of you in the Northeast, stay safe. Get your milk, get your eggs, get your bread, hunker down. I think the storm that they have predicting is actually going to develop. So everybody be safe. Thanks again. We'll be back next Friday, 12:30 p.m. Eastern Standard Time on Facebook, and summarizing Market Monday, Tax Tuesday, Wealth Building Wednesday, and then think ahead to Thursday post. Thanks again. Securities offered through LPL Financial, LLC, member FINRA, and SIPC.org. Advisory services offered through LPL Financial, LLC, a registered investment advisor. Brian Peluso, Michael Kutch, and David Harper are registered representatives of LPL Financial, LLC. Content discussed is for informational purposes only and not intended as an offer or solicitation to buy or sell any security or investment strategy. Any opinions expressed are those of the authors and do not necessarily reflect the views of LPL Financial or its affiliates. All investments involve risk, including the possible loss of principal.
This communication may include links or references to third-party websites. These links are provided as a convenience only. LPL Financial and its representatives are not responsible for the accuracy or content of such sites. Brian, Mike, and David and HPK Provident Advisors may only transact business in states where they are properly registered or exempt from registration. Please contact us directly for information regarding licensing and registration status. Past performance is not indicative of future results. You should consult with your financial advisor, tax professional, and/or attorney regarding your specific situation before making any investment decisions.